Alrighty guys, what is going up? So welcome back to another episode. In today's video, we're going to be talking about why I just spent over $2,000 on Bank of America stock. So I hope you guys enjoy it. If you guys get anything in value, hit that like button and subscribe to the channel. If you guys want to learn more about investing in the stock market, go ahead and check out my course. It's free for one more day. So make sure you guys sign up. All you need is an email. So make sure you guys click that link and sign up. So now guys, let's jump into it, roll that intro, let's go. Bam! So yes, I did buy 72 shares of Bank of America stock, and maybe it's because I am Warren Buffett, because he just picked up some shares. So this is really cool to see because it gives you a lot of confidence behind your investment. The reason why is his average return is 17%, and that's outperforming all the indexes, the Dow Jones, the NASDAQ, and the S&P 500. So that is really cool. It gives me a lot of confidence as a Bank of America investor for the future. So from my $2,000 investment, I'm going to be getting around $51 per year in passive income, baby. So I'm not gonna have to lift a finger for this money. And I know a lot of people right now probably are saying, well, Carter, why would you only invest $2,000 and get $51? That's not a lot. Well, here's the thing, guys. I'm starting that snowball effect. So maybe this year I'm only getting $51, but maybe the next year it's 75, then 100, then 200, then 300, starting that snowball effect with my dividends, also known as compound interest. And yes, with all my dividends, I'm going to be using DRIP, which is the dividend reinvestment plan, so I can start it because it's the best way to do it. On average, when you guys are signed up with DRIP, you make around 3 to 4% more per year. Look at this graph. Look at this. This is why you reinvest all your dividends right here. Look at that. But Bank of America does have a ton of long-term potential. Look at the price to earnings. Right now the price to earnings is right around 13.8. That is very undervalued. Me personally, I like to find stocks that are trading under 25. The reason why is because the price to earnings is really a gauge to find if stocks are trading overvalued, undervalued, and how much you're paying for your earnings. And right now with it being right around 14, that is very undervalued. If you look at a company like Tesla, Tesla's price to earnings is like 800, but that is a growth stock, so yes, it is a little different, but as a value investor like myself, this is really cool to find a company that has a ton of long-term potential just off the price to earnings. So yes, you guys know that they do pay a dividend, but did you know this? Over the past 3 years, they've grown their dividend 164%. So this is crazy because we hope as investors that the history repeats itself. So like I said, that $51 could easily turn into $60 and $75 and $80. And yes, their revenue is very, very good. They made around $75 billion last year, so that's really strong to see. With the profit margin right at around 25%, strong numbers, strong fundamentals, really no bad things in sight. They have a ton of cash, over $800 billion in cash. So if this company slows down at all, they can use some of that cash to grow the business or to even pay investors, which is really cool. And now you might be saying, well, Carter, what is their payout ratio? The payout ratio is only 25%, which is really cool. Payout ratio is just a ratio of determining how much money the company actually pays out to dividend investors. So if a company pays out 100% on their payout ratio, they have no money left over to grow the business. But Bank of America still has 75% of their money that they can use to grow the business, which is great. Now the only thing that is down a little bit is their quarterly income growth. It's down around 5%, but I think since this whole kind of recession we're in, everything's kind of being weird, I do think that this company will turn around in the next couple of months. So now that we got a good understanding of some of the fundamentals, now let's move to the technicals. So this is gonna be like support, resistance, where I see it in the future, my price prediction, so I hope you guys enjoy it. Alrighty guys, so we have ticker symbol BAC. This is Bank of America's ticker. Now looking at the chart, you guys can see that there is some clear resistance here at around 32, some more resistance here at 35, which is that all-time high, and some more support here down at around $22. So now that we marked out that resistance, the strong support, now this huge crash was pretty much just a March recession. You guys can see it crashed from that 35 point all the way down to $17 a share. Looking at it on the RSI, that was a very undervalued territory for this stock and maybe a little overvalued here at around 35. That's why we got that little bit of temporary sell-off. It was going to rebound, hit that old resistance, and pretty much sold off big time. Now, looking at the chart here, you guys can clearly see that there is some very strong resistance here at 28. It hit that resistance and sold off here. Now, the thing about this is we are still on a short-term upward trend, which is really strong, really positive. Now, I personally think that we're going to have a little more fall here at around $27 before we get another bounce. That $27 mark is going to be this 90 moving average line. You guys can see that in the past, it's used it as support right in here, here, little here. So it uses it a lot as support. So I do think that's going to be a very, very strong buy point to buy. But if you're like me, a perfect strategy for this one is dollar cost averaging. That's what I'm doing. I put $2,000 up front, but I'm going to continue to invest weekly into this company here. I think that there is a ton of potential for it. And if it falls down here, I'll probably spend another $2,000 to $3,000, averaging my price right at around 27.5. But even for this fall, guys, that's only a $1 fall. So this stock really does not move too much. And I do think that by mid to late next year, the stock will be probably trading somewhere around $32 to about $34 a share. That's my price target, is at 34. I do think a perfect buy zone, if you guys are going to do your one lump sum investment, would be right around $26 to $27 a share. Always set an alert here at 25. Because it could possibly happen, but I think that since it broke over this 200 moving average line, it's all upwards, baby. So everything looks really strong for this company here. So now you might be saying, well, Carter, you are just like Warren Buffett, and that is what I like to hear, my friend. And we'll see you guys tomorrow. Don't forget to go ahead and check out my course. Remember to stay happy, stay positive, and stay safe out there. Stay safe, please, for me. All right, take care, guys. Have a good one. Bye.